Some debates refuse to settle. Like, who's the biggest star? Is it Shah Rukh, Salman or Amir? And who is India's greatest cricketer of all time? Is it Sachin? Is it Virat? Or is it Dhoni? And which is the best small cap fund in India? Is it Quant? Is it SBI? Or is it Nippon India? Well, we have a divided house right here in ET Money.
I would prefer Nippon India Small Cap. Obviously returns are good, but I like that the fund manager has invested in more than 190 stocks. It gives me the comfort that it won't face liquidity issues.
So I like SBI Small Cap Fund. It has been around for a long time. Also, it has great returns history. But the best part is that this fund does not fall as much as the small cap index whenever we see the markets correct.
See, as an investor, what do you want from a small cap fund? Three things: returns, returns and returns. And Quant Small Cap delivers it. What else do you want?
We see the same thing in our comment section too. So we decided to settle this debate once and for all. We are going to compare these three funds on different parameters and we'll tell you how these funds have fared on them. But let me tell you one thing at the beginning. We are not going to rank them 1, 2 or 3. We are not declaring any winners. So why are we doing this? Well, we want to help you pick the fund that is best for you. And by the end of this video, you will definitely know where you should invest. Hello and welcome to ET Money's YouTube channel. But before we begin, a quick reminder. You're watching this video on our English channel. और हमारा एक हिंदी चैनल भी है जहाँ पे ये सारी वीडियोस आप हिंदी में देख सकते हैं. And if you are or know somebody who wants to understand the basics of finance, we have a channel called as 5-Minute Finance. Alright, now let's begin and we will start with returns. We understand that returns comparison is the first thing you will want to know. So that's the first thing we will discuss. For the returns, we looked at the rolling returns of 2 and 4 years. I know 2 and 4 years are short periods to invest in small caps, but we face some limitations here. Before October 2018, Quant Small Cap Fund was a debt fund and it was called Quant Income Bond Fund. Also, the SBI Small Cap Fund was not a small cap fund before May 2018. Earlier, it was a small and mid cap fund. So if we take long-term data, you won't get a clear picture of the returns. Now, in this short period, Quant Small Cap Fund has the best returns, followed by Nippon India Small Cap and then SBI Small Cap. And while the performance between Quant and Nippon was close, SBI Small Cap's recent performance is not that great compared to the other two funds. Quant Small Cap 4-year average rolling returns are 39%, while that of Nippon India Small Cap Fund are 30%. And SBI Small Cap Fund is third with 26%. Now, Quant Small Cap and Nippon outperformed the benchmark every time. But when it came to the category average, Nippon beat it only 95% of the time, while Quant outperformed every time here as well. But this is only one way to look at performance. We also checked calendar year returns for 5 years. We did so because calendar year returns show if the fund has consistently performed year after year. Quant Small Cap Fund has the best returns in 4 out of the 5 years. Only in 2019, it fell drastically compared to the other two. Nippon has performed better than SBI in 2 of the 5 years, which means SBI has done better than Nippon Small Cap Fund in 3 of the 5 years. So in recent years, Quant Small Cap Fund has better performance than the other two. But let's not forget that data is only for the past 5 years. Returns are one way to evaluate a fund, but they are not necessarily the best parameter. Remember this guy? He is both right and wrong. Most investors do base their decisions only on returns. But once you understand risk, things change. You will probably never chase returns after that. Here is why. Let's say you invest 100 rupees in Fund A and Fund B. And soon after investment, Fund A falls 30% and Fund B falls 15%. Now your investment in Fund A will be worth 70 and in Fund B it will be 85. Now for 70 to become 100 again, Fund A needs to gain 43% while Fund B needs to gain just 18% to go from 85 to 100. So a fund that falls less is also a great fund. Alright, with that context, let's look at how these funds have fared when markets fell. Now since December 2018, there have been 6 quarters when the small cap category delivered negative returns. So how did our 3 funds perform? Well, Quant Small Cap Fund fell more than category 4 out of 6 times, while Nippon fell only in 2 quarters out of 6. SBI Small Cap Fund, however, did better than the category 5 times. Only in one quarter, it fell more than the category. So while Quant Small Cap Fund has the best performance in the recent past, it is also the most volatile fund among the three. Don't be like this guy. So returns and risk should give you a fair picture of the funds. But to help you make a better decision, we also looked at the investment style of these three schemes. In this section, we will discuss three different parameters. Let's start with the PE ratio. Now, the PE ratio is one of the indicators that tell you whether a fund follows a value, blended, or growth style of investing. But a word of caution here. A high PE doesn't mean that the fund is investing in stocks that are overvalued. The opposite of this is also true. A scheme with a low PE doesn't mean it has been investing in undervalued stocks. So what does the PE ratio of these three funds tells us? Well, SBI Small Cap consistently has a higher PE ratio compared to other funds in the category. This indicates that the fund tilts towards the growth style of investing. And Quant Small Cap Fund, on the other hand, has a lower PE ratio compared to other small cap funds, so it tilts towards value investing. And Nippon sits somewhere in between. Now we have seen that different styles of investing work in different market cycles. After COVID, value investing has done well in India compared to growth. But in the past decade, growth has worked most of the times. Now, knowing this will help you understand why your fund is doing well or underperforming. Now, we will check how often these funds buy and sell stocks. We are looking at it because some investors like funds that buy and hold stocks for the long term. They think it shows the fund manager's confidence in the stocks he has picked. For this, we will look at something called as the turnover ratio. If the turnover ratio of a fund is 100, it means the fund manager has changed the entire portfolio in 1 year. So a lower turnover ratio means the fund manager believes in buy and hold. However, the turnover ratio changes every month depending upon what fund manager buys and sells. Now, if you look at the historical trend, Quant Small Cap Fund maintains a higher turnover ratio. Nippon Small Cap has 206 stocks. So in the recent years, the turnover ratio has been low as a number of stocks have increased. And SBI Small Cap Fund is somewhere in between the two. It is also a reflection of their size. As a small cap fund grows bigger, it is not easy to buy and sell too often due to the liquidity constraints in their space. Next, let's look at how these funds invest across market caps. Now, the SEBI mandate says that small cap funds should invest at least 65% in small cap stocks. It means these funds can invest the remaining 35% anywhere they like. Now, this 35% investment is crucial if markets fall, because large cap stocks or debt funds can cushion the fall to some extent. In times when markets rally, higher investment in small cap and mid caps can give higher returns. So let's look at where these funds invest. At present, SBI Small Cap Fund invests 75% in small caps and 8% in mid caps. There is no investment in large caps. The remaining assets are held in form of debt and cash. Now remember that SBI was a small and mid cap fund earlier, so it has usually maintained allocation to mid caps over the years. Now the Quant Small Cap Fund has invested 73% in small cap stocks. It has close to 18% allocation to large caps, and around 1.5% is in mid cap stocks and close to 7% in debt. But if you look at the trend historically, Quant Small Cap Fund doesn't follow any pattern. In some years, it can be heavy on mid caps, and in other, it could favor large caps. And despite close to 205 stocks, Nippon India Small Cap Fund has 68% allocation to small caps. It invests 17% in mid caps and 11% in large caps. Even historically, it has taken a balanced approach. Finally, we will briefly talk about the number of stocks in their funds portfolios. We have seen a trend in the small cap funds. As the scheme size grows, the fund manager increases the number of stocks in the portfolio. Small cap stocks have lower liquidity and trading volumes, so a fund manager cannot invest heavily in any one stock. And if he does that, he will find it challenging to buy and sell at the desired price, because an investment of a few crores or selling stocks worth a few crores can impact the stock price drastically. Now, as of December 2023, Nippon India Small Cap Fund had 206 stocks in its portfolio, and that's huge. This is primarily due to the large size of the scheme. It's the largest small cap fund, so it needs to find a large number of opportunities to deploy its assets. But do know that it has less than 2% allocation to any one stock. The only exception is Tube Investments of India, which has close to a 3% allocation. Now, Quant Small Cap holds around 100 stocks. It increased the number of stocks in the portfolio as the fund size grew. However, the fund has close to 10% allocation to Reliance Industries. An allocation of more than 3% to a single stock is not uncommon. But the SBI Small Cap Fund portfolio was surprising. It holds around 55 stocks. For this size small cap fund, the portfolio can be called concentrated. The fund restricts its investment in most stocks at 3%. The only exception is Blue Star, which has slightly over 4% allocation. Alright, let's now move to our concluding section. The three funds have a completely different appeal. Quant Small Cap Fund offers high returns, but it is also the riskiest among the three. The investing style and stock allocation are dynamic. It's rare that a fund invests close to 10% of its corpus in a single stock. SBI Small Cap Fund may not have the best returns, but it offers better downside protection. However, it has a concentrated portfolio and follows a growth style of investing. It also has a high allocation to debt right now. So if small caps correct, it may cushion the fall better. In fact, we saw this happen recently. Between 9 and 15 February, small cap stocks saw some correction. The 1 week returns for SBI Small Cap Fund was 0.06%, whereas Quant and Nippon India Small Cap Funds fell by 1.56% and 1.93% respectively. Nippon India Small Cap Fund is in between the two funds. It has decent returns and downside protection. Its investment style is a blend of growth and value and has a balanced allocation to mid, large and small caps. So you tell us in the comment section which one do you prefer. And with this, we have come to the end of this video. If you would like to see a detailed analysis of each of these funds, it's available on our channel. Go check it out. And if you found this video useful, do share it with your friends and family. I'll see you soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.